Now, with the likes of COVID-19, there's been numerous companies that have struggled, and it comes down to either not being able to work or the underlying business itself is unable to operate due to the restrictions in place. Now, one of the more resistive types of sectors out there is the one in technology. So I want to look at companies that operate within the gig economy and understanding how they have been impacted in recent times. Now, there are pros and cons to the gig economy, but one potential upside is that the model provides you with a flexible job opportunity. Now, that can be on a temporary basis, or it can be based on the hours that you decide to work. And so if we think of the likes of Uber drivers, for instance, they operate in the gig economy and they can choose whether they want to work on the weekend or whether they want to have a break during the weekday. Now, contrasting to the gig economy, we have the standard traditional economy. And so we have full-time workers. And in the past, individuals would be loyal to their companies and they would remain at the company for the lifetime of their career. Now, as for the traditional economy, there's more stability in terms of career and in terms of the paycheck that you receive each month. But for some individuals, they enjoy deciding when they head out to work. So let's look at how COVID has impacted some of these sectors that have customers that operate as a gig economy. So Airbnb is another example of the gig economy. So we can see from the title, Airbnb has cut almost 2,000 jobs and as a percentage, 25% of its workforce. Now, travel has stopped for the most part. In areas such as Asia, Airbnb isn't as prevalent in those continents. And so this has led to a cut in the workforce. And we can see this is one of the largest layoffs to have hit Silicon Valley due to the coronavirus outbreak. Now, Airbnb was going to be IPOing in 2020, and of course it's still possible, but somewhat more unlikely. And yet, the coronavirus has absolutely hammered the business model of Airbnb. If you're unable to have customers, then you're going to be operating at a loss. Now, Airbnb has a much larger problem. Customers that purchased on the site during the coronavirus outbreak, those individuals were able to receive their deposit. Now, there has been stories of some individuals that have been given late payment or there's been an issue in receiving the funds. But the main problem is on the hosts. So some individuals use Airbnb as their entire business model. What they will do is they will buy homes, they will have them hosted on Airbnb's site. And so if you have no customers to book, then the mortgages that the hosts have for the individual properties, they're not going to be able to pay them. And so Airbnb hasn't offered any form of support for the hosts. And so we're most likely to see less house listings in the future. And so once Airbnb is fully operational, we'll still see a decline with the availability. But the point to highlight here is that a company that was recently going to IPO is slashing their workforce by 25%. That is a lot of layoffs in the tech industry. And so in the short to medium term, it's definitely a worry for Airbnb. Do I think that this company will be around in the future? Most definitely. But they definitely have some rocky times ahead of them. So moving on to Uber, and similar headline with different numbers, 3,700 jobs have been cut or will be in the near future, which equates to 14% of their workforce. As a slight tangent, we can see in the subheading here, Lyft also mentioned that they'll be laying off around 1,000 workers in April. Now, this layoff is related to a reduction in trip volumes, and that is expected if individuals are having to lock down for the most part. Now, businesses perform these layoffs to save money. That's the whole goal here. Most companies don't actually want to lay off individuals, but we can see that this process is actually going to cost around $20 million. And that's because full-time employers have severance packages, they may have shares within the given company that they work with, and other types of payouts in the form of benefits as well. Now, still looking at Uber, we can actually see how Q1 performed. So Uber Eats, which is related to Uber, they operate in the food sector and they deliver food to your doorstep. Now, if more people are in lockdown within their homes, then they're more likely to use an app or some other type of service to order food to their doorstep. It saves them a trip to the grocery store. And so there's no surprise here that the growth rates for the Uber Eats has grown significantly. So we can see that the company lost close to $3 billion just within the first quarter. So the goal with Uber is to grow as big as possible. It's known as economies of scale, and so if you have a large customer base, you can spread the cost out to really low values, but you can then operate as a profitable company. Now, Uber is definitely not there yet. They have levels of losses that need to be changed if they are going to continue to survive. Now, it's definitely a good job that Uber Eats exists for Uber. Without that, their losses would be even higher. But for the gig economy in general, I do like the fact that we have companies such as Uber. For instance, if I am unemployed from my regular 9-to-5 job, it's possible to work for the company and make extra money on the side. So when we think about these types of gig economy companies, they actually provide a net benefit to the industry. If you do have a 9-to-5 job and you are laid off, then you are unemployed and you would potentially have to seek some form of government funding. But the fact that we have this gig economy in place means that we can prevent ourselves from being unemployed. For sure, it's not full-time work hours, but it provides you with some form of income, which many individuals would greatly appreciate. So despite not being an investor in Uber, I do hope that the company continues to position itself so that it can become profitable in the near future. Now, with the likes of big tech companies and ones that offer really great perks, it can sometimes become a shock for employees of the company when they have to start cooking their lunches, cooking their dinners. So we have a situation here where Google has had to tell their employees that they are not allowed to expense food or any other types of perks when working from home. Now, the previous post actually referenced what one of the users wrote within Hacker News. And so they stated, my productivity has gone down as well because A, I didn't have a coffee machine at home and ended up either having to take a mile-long walk to Starbucks or fight against my morning drowsiness. B, I now need to cook, do the dishes, etc., which are previously handled by the office cafeteria. And C, I tried to reduce my screen time by not having external monitors at home, and now I code on a small 13-inch laptop display. So going back to the first point, I think it's just really childish to bring up about having a coffee in the morning. If you need one, you can just buy a store-bought product and make a coffee yourself. You don't have to go to Starbucks. As for the second point, I would say that for the most people, they are used to having to work their job and then go home and cook, clean, etc. There's also alternatives to order takeaway, for instance, if you don't want to do that. But I guess for this individual, welcome to the real world. Hopefully they will appreciate that not everyone is given free perks such as free food all the time. Hopefully this post isn't from an actual Google employee and they're just cracking a joke. There's been a lot of comments that you're free to read through. And so just to summarize, what does the future of gig economies look like? Now, I personally believe that any type of company in the tech industry is very well accustomed to adapting. And so these types of companies that I mentioned are very high profile and they'll do whatever they can to make sure that they are heading towards profitable levels. So when we think about a post-COVID way of life, we have to look at some of the benefits. If we have more individuals working remotely, then companies can save from office costs, for instance. So with the gig economy, of course, it's difficult for individuals that are unable to work. If there's no benefits from the company during that layoff period, then they're definitely going to struggle. As for an investor, some of these companies I'll be happy to invest in and others I wouldn't. You have to take them on a case-by-case basis. If you group the whole gig economy into one, they operate so differently. So it'd be interesting to see how these companies do in the future. No doubt they will pivot and do the best that they can. I personally believe that these companies will be around and there'll be new companies that are formed as well, which can be more resilient to the likes of future pandemics. So thanks for watching everyone, and with that said, I'll catch you in the next one.